What's up, y'all? It's your girl Jay, the Market Slayer. How y'all doing? Y'all had a good day today? Did y'all capitalize off of this beautiful price action? These beautiful buys today? Let me know in the comments below how your day went before we start this video. Before we move into this week, I want to just take a look at what happened last week. And let's see if we can use that to analyze where the market may go, may or may not go. So yeah, in this video, I'll be reviewing last week's price action. I'll be breaking down my trade that I took today. I actually took 3 trades. I only got to record one, but that one was my biggest trade anyway. So I'll just walk you guys through that. And also I'll be going over my top-down analysis for this week upcoming week. Okay, so no predictions, just preparation, highlighting areas of interest and things of that nature. Okay, so last week I have a lot of boxes here. I know I'm gonna clear them out as we go along, but basically last week what happened, we have this imbalance on the daily, and price hasn't filled it with a candle closure below it or within it. So all we did was get wicks and wicks and wicks, right? On the lower time frame, the 4-hour, same thing here. And then we also had another gap up. So we had this gap down that got filled 100%. This was the one that we had for the week opener, and that got filled 100%. But we consolidated within this range for a while, and then we did a gap up here on the daily time frame. It's a bit bigger, and that's this brown box here. But this gap didn't necessarily get filled. We wicked into it and just wicked right out, and that just let me know that price is looking for, the buy side. Like, that's the next draw on liquidity. We're trying to take the buy side before we do anything else. We had another gap opening here on Friday. So this was Wednesday, and then this was Friday. So a gap up and then a gap down. This got filled basically immediately on the next 4-hour almost. And then, we pushed up. I had this swing high highlighted. I should have did this swing high. This swing high is the next highlight, but these are all buy side liquidity areas that I have marked up with these white lines. So that's what I was looking for, the draw on the buy side into this 4-hour imbalance here. So this is a little combination, I guess, of last week and this week, because this did not happen yet. But this is what I'm seeing as an area of interest, because this 4-hour never got filled. It got wicked the same way that daily imbalance got wicked. So price usually likes to come back to these wicks. They left unfinished business here by not closing this gap. So the market always looks to correct itself, but it doesn't do it right away. Unless you're on the smaller time frame, the higher time frames take longer to fill. So that's what we have going on here. We have some imbalance on the 4-hour, buy side liquidity. So my bias today was obviously a buy, because everything is pointed in the direction of a buy. However, I missed opening bell. I was a little under the weather, and I saw everything mapping out pre-market. So London session, we had a nice drop back into this. What was this? The 30-minute? Oh, no. This was that 4-hour drop, that 4-hour gap. Yeah, so that was from last week. And I saw that price actually dropped down into it again. Like these higher time frame fair value gaps, I dragged them out because price still respects the levels. So I saw that it came down halfway during London. It closed a little below, but it was respecting the middle pretty much. Even though it had a massive drop, I saw that it was trying to buy up. And the next target I had for the buy was this 30-minute bearish order block. Okay, so that's the main thing I had here. This bearish order block before everything happened. Price was rejecting off of here on last Friday. It pushed down. We had the gap down and all of that. So I'm gonna remove this one because we move pretty much past that. These are still open. Well, I'll remove this one too. But this one was still open on the daily. I'm going to keep it. This is a daily volume imbalance. So I'm going to keep that. And yeah, so I saw how price was inching back up. And now we started to fail to swing lower in continuation for these sells after this massive displacement down. And that just let me know that it was just trying to probably take out these little wicks down here. It didn't break Asia's low either. So that's another confluence to let you know that, price isn't necessarily trying to reverse. It could just be trying to just take a couple stops on some intermediate lows that aren't really significant and then reverse into the direction. So yeah, pre-market was here. I'll go down to the 5-minute. You can see a little bit clearer. So yeah, this was a pre-market from about 7 on. We have this consolidation and then we broke above, pulled back, and then we broke out of this box, so to the upside, and then we came back to retrace it, and that was the low of the opening range. And then after that, it pushed up past this pre-market 5-minute candle, and then it continued. This fair value gap here I had marked up on the 1-minute time frame, and that would have been a beautiful entry had I been awake for the opening bell. So price made this fair value gap, and then it just like wicked it. It did not close beyond it. All it wanted to do was close above, but it just kept on pushing down into it and just basically coloring outside the lines. And I got to the charts around here. This actually was a fair value gap from last Friday, right? So it was a bearish fair value gap, right? Yes, this was a bearish fair value gap I had marked from Friday. And I wanted to see it get flipped because I got in the market late and the opening range had already closed. I wanted to see it get flipped so that it'll confirm my bias. Now price is actually bullish. We have made this bearish fair value gap inverse, and now it's bullish. So it did do that. And it pushed up, pushed back down, pushed up, pushed back down. So I got in here off the push up. This candle was pushing off of it, even though it was bearish. It closed red. I still got in because it pushed off, it cleared it. You know what I'm saying? After this initial break, it came back to retest, it pushed up, and this candle afterwards pushed up as well. So this was an opposing fair value gap I had also on the 5-minute time frame. I'm gonna delete that. But yeah, so this was the main one that got, like, this was the perfect zone for the buy. But instead, I got in a second time, I believe around here. Yeah, so after I got stopped out over here. Then I got back in. I set my stop below this. And then price pushed up. It finally broke above this high, this swing high here. So I'm going to play that trade. And I sped it up a little bit because it took a little while to play out. But yeah, I'm going to play that trade and walk you guys through the whole process. So first things first, you see the trade here. It was the first one I got in off of. I got in off of the buy here. Got stopped out over here when price pushed through. I immediately sized down. I went in with 7 contracts. And if you can notice, I immediately, after getting funded, I immediately switched to micros because 1, the month of January has been a little bit difficult. And 2, I just want to take my time in reaching the payout. You know what I'm saying? Like, The eval is where you get aggressive and you go heavy with size. But once you're funded, you got to take your time. Okay, so basically now I'm in the trade. I got in off of this same fair value gap, and I set my stops below about 25 points. And it's just basically from this displacement candle. I saw that it pushed up, and now we have volume on our side. Volume wasn't on my side over here after I got this massive engulfing bearish candle. So I got in. Now after this, once I saw it rejecting off of the middle of the fair value gap, and as you can see, it played out. Now what happened, I marked the high of the opening range. Once we crossed over that, I was looking to scale in, but at the right moment. I needed to see more bullish push, you know what I'm saying? And as you can see here, we got that. So yeah, after that, I added into my position. It kept pushing and pushing and pushing, and now I'm looking for an area to get out. Like, I'm managing a trade. I ended up trailing my stops. I was gonna remove some of my position, but I was like, you know what? Let me just trail the stop here. And that's just what I did. And I thought I was gonna go higher and give me that 50 points, but it did not. Yeah, so that's just basically how it played out. It ended up taking out the majority, pushed up, and then it stopped me out for the rest. And that was the end of my trade. So one thing that also happened here is I started watching my profits a little too closely instead of just letting the trade play out. And I think that that's another thing that kind of made me like a little bit emotional, because I'm like, okay, I took a loss and I want to make it back. And, I'm not feeling too well and all of that. I feel like all of those things come into account when you're not feeling well, and also, negative things start to happen. But I feel okay with the way I managed the trade. I respected my rules. I got in, got out, and it is what it is. But that main thing is just that I was watching my profits too closely. Like, oh, how much am I up? How much am I up? Instead of just focusing on the move itself. So for next time now, for sure, I would wait until I start to see more bullish price action. If I'm looking for a buy, more bullish price action, because I got in where the price was actually, coming off of a pullback, and it wasn't necessarily ready to go back up yet. And I just got in aggressively off of a rejection versus waiting for that confirmation of the bullish volume in the market. I had to wait and see. And this is where it was presented the most, where it pushed up, it came down back to this, which was the main area that I had. And I also should have waited for it to come back down here again. But honestly, I just figured this one was the new one to be respected after the way that this closed like this. It didn't really close too much beyond it, but it decided it wanted to come back to this 1 minute fair value gap. And then it pushed off of here. So it's like, those things I have to get better with, and that will help my timing on entry. Just having that volume to back my idea versus getting an aggressive entry just because of a rejection. So yeah, that's one thing, waiting for the candle to close and getting more confirmation. And yeah, that's my main thing. My timing has been the issue for a little while now. That's why I said January has been a bit difficult, because I've been entering trades with the right idea, but my first trade is like a loss because I'm entering at the wrong time. My second trade is a win. And it's like, that's how it kind of been this whole month. And that's another reason why I've been kind of waiting until after the opening range closes. So around 10 o'clock, I'll look for entries, because I honestly need to see what the market is trying to do and let it show its hand, because I don't want that timing and try to jump in. Today was one of the days where it played out pretty nicely. We had that fair value gap form. Price continued off of that and showed that it was, bullish. It's ready to take that liquidity. And that it did. So, that's just the main thing I need to work on. And yeah, so for this week now, like I said, we'll be looking for some buy side to be swept. A lot of people are saying that the indices are bearish and all of this, but I believe that it's going to sweep this liquidity at some point, this buy side liquidity at some point. We pulled back. We pulled back a good bit. And now it's just pushing up, 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 up. These highs are very smooth right here. I believe that they're going to take that out before they bust the next move. Whatever it may be, even if they want to go down. You know what I'm saying? We got the all-time high here. I need to mark that up. Because, because that's another level to watch out for. Just in case price continues on. You know what I'm saying? That'll be the next target. It's that all-time high. We break through this. We get all the way. We're ripping and running. Okay, so yeah, that's basically it. This 30-minute order block was invalidated today, and all we have to the left are wicks on the daily. The same thing for the 4-hour, because this was our consolidation zone. So the only areas of interest that I have are like lower time frame order blocks, this 30-minute order block, and also the liquidity, these highs. So yeah, I just have to get more data during the week, but so far right now, this is what we got. This is what we're working on. And like I said, next target could be this push up. We already broke past it, came back to retest. We did not close below this 30-minute, and now it's pushing up some more. So next stop is that 4-hour imbalance looking to be filled. You know what I'm saying? That's all I got. Okay. Preparation is really key here, because as a full-time futures trader, homeschooling mom and wife, preparation like this matters. Okay, I don't have time to be emotionally trading or chasing moves. And as you can see, even when I wake up late, I still am pretty prepared because I have my markups from days before. So this is how I stay grounded and consistent. Just prepare yourself before you jump into the market. Don't just jump in on the fly. You see market going one way and you think, oh, it's buying up, let me just get in or buy. No, that's how you get caught in a reversal, honestly. So you always want to prepare and just look at areas that stand out, really. That's it. So if this helped you frame the market or your mindset, go ahead and like the video and subscribe. I'll be back with New York Open Trade recaps as the week unfolds. So I'll see you in the next one.